Right, thank you very much for that confirmation. So again, a very good morning to all distinguished guests. I would like to thank Mr. Tsuruga for very kindly inviting me to share at this very important event. Clearly, we are deliberating long-term care insurance system for Indonesia context, and I'm very happy to share Singapore's experience on this aspect. So let's get started. Next slide, please. So just by way of brief background, I'm a faculty at the LKY School, the Lee Kuan Yew School of Public Policy, at the NUS, where I teach economic analysis, economics of aging and pensions and retirement policies. So earlier on in the introduction, the opening remarks, you mentioned a workshop on pensions, then I would be most excited to also contribute on that front. And the key point really is that the pensions and the long-term care financing somehow are quite tightly integrated, at least in the Singapore context. So there's a lot of synergy in studying these two social protection schemes together, pensions and long-term care. I currently also serve as the assistant dean, where I teach master classes of these topics to foreign delegates from Pakistan, Bangladesh, and other parts of the world. My research on long-term care has started many years ago. As very importantly pointed out by the presenter, Mr. Yuta, and it's clear that long-term care is related to the activities of daily living limitations. And that's where I started thinking about disability among the elderly, and then what kind of care they need and how such care can be financed in both the Singapore context and more broadly the global context, including South Korea and some neighboring countries. In both 2016 and 2025, I provided consultation to our Ministry of Health in the reforms of our long-term care insurance scheme. So let me share with you something about the Singapore experience. Next slide, please. So this is the outline for today. It's basically a timeline. So Singapore's pilot program with long-term care insurance began back way in 2002, almost 30 years ago, as you might imagine, and all the way till today. So there were two key reforms. One was the 2016 reform, or the Eldershield Review, and then we had the more recent 2020 reform as well. So I'll cover all of these in the sharing today, focusing perhaps most importantly on number one, which was how we got started with this in the very first place. Next slide. Next slide. So in terms of what started this thinking about long-term care insurance, just like Indonesia, what happened was that Singapore started to age quite rapidly back in the 1980s and 1990s. So in fact, the talks for a publicly administered long-term care insurance program began in 1997. So that is way back. And that was because policymakers realized that our baby boomers, those born after World War II, were reaching old age in time to come. And by 2017, Singapore would officially become an aged country by US definition, right? And by 2026, which is next year, we'll be progressing from aged to super age society. And some of you may have heard of this term before. And super age just means that 21% or more of our population will be age 65 and over. Next slide. This is a simple illustration of a bit of our demographic structure, starting from the 1990s, where policymakers started to think about setting up the long-term care insurance program in order and in preparation to serve an aged society by 2070. Next slide. So who got it all started? In fact, it was an interministerial committee with representatives clearly from the Ministry of Health, Ministry of National Development, even Ministry of Finance, because we are talking about an insurance scheme. We had Ministry of Social Affairs as well. Clearly, it is related to social aged care. So all ministries kind of sent in their representatives to form this interministerial committee, which then proposed the idea of using risk pooling and therefore an insurance scheme to serve as the basic financial protection for severe disability. And the key point was that insurance would allow us to pool the risk of severe disability across the population. Clearly, not everyone will become disabled, and not everyone, even among those who become disabled severely, not everyone would need long-term care for an extended duration. So risk pooling was thought of as one of the better ways to pool the risk of all the citizens and all the residents in Singapore, because suffering from severe disability is considered a low probability and high cost event. Next slide. So the policymakers deliberated and decided after some years, 1997, they took about 5 years, and then they rolled out ElderShield in September 2002. And the participation in this scheme, which I call a pilot program, is actually a pilot scheme because it's brand new. Back then, it was voluntary. So you could sign up, or if you were enrolled in that scheme, you could also opt out. So there's a choice. You can choose not to have this long-term care insurance. And in a way that was useful because we were talking about elderly cohorts who may have already purchased their own long-term care private insurance and didn't need this. So that was an option. And then we had the benefit payout, which in the previous sharing, it was mentioned we took only the cash benefit payout. And it was quite a modest amount, about $300 per month of payments for a duration of 5 years. We decided to use quite a simple benefit eligibility criteria, which is severe disability is defined as having 3 or more ADL disabilities. And these include the 6 that you see in the picture below. I think in a way, in my conversations with policymakers, the choice of this simple benefit eligibility criterion is really to have a straightforward scheme, and in order to provide basic protection, which means that we do not cover those with mild disabilities, but those with just severe disabilities. So you have to hit this threshold before you become eligible for the benefits. And that would really help to simplify the administration of the scheme when criterion is set in a straightforward manner. Next slide. In terms of the annual premiums, we kept it very affordable. Those who participated in the scheme would pay premiums of about $14 US a month at most, from ages 40 to 65. Females had to pay a bit more because we anticipated that females would have a longer duration in disability. The premium payment was integrated with our pension system, which is called the Central Provident Fund. So it's largely automated in a way that the citizens or residents would first contribute to the Central Provident Fund. And within the Central Provident Fund, there is a MediSave account, one part of it, which we can draw on in order to pay out this long-term care insurance premiums. So in that way, it was largely automated. And the insurers included these 3 local insurers that you see in the picture below. But the Ministry of Health made sure that they conducted an open competitive tender each round in order to appoint the insurers. And this kept in a way, the market competitive to a certain extent, and it also allowed consumers some choice in selecting which insurer they could switch between insurers over time. Next slide. And then after the ElderShield was implemented in 2002, 5 years later in 2007, there was a review. And of course, when each time they review, they enhance the scheme a bit. So in the 2007 review, two key enhancements were that they added insurer, and there was also another product. So there was, in addition to the ES 300 product, there was the ES 400 product, which you see in the table below. And in a way, the ES 400 allowed for slightly higher payout amounts, $400 per month, if you suffer from severe disability for a duration of 6 years, the payout. Next slide, please. So to sum up my thoughts on this pilot program, the ElderShield policy design is that, as I mentioned, is actually a very straightforward design. And it was designed to be that way because it was the first time that Singapore was launching this long-term care insurance scheme, and they wanted a very basic, bare-bones scheme that would provide financial protection to those with severe disabilities. So it was meant to be affordable, so as to be inclusive. And how they made it affordable was that they had a pretty high threshold for benefit eligibility. And then the benefits were just 300 to 400 Singapore dollars a month, which is quite modest. And they kept the payout at a fixed duration of 5 years to 6 years. So in that way, we could keep the premiums low. Another interesting feature that other governments may want to consider is that we use the power of defaults. We use auto enrollment. So basically, it was an opt-out. So by default, if you do not opt out, you'll be enrolled naturally when you turn 40 into this national insurance scheme. But if you decided, when you receive the letter in your mailbox that you have been enrolled and you decide that is not for you, you could opt out. So that was a way that we tried to increase participation in the scheme. We also limited it to 2 products, so it was very easy to decide. Clearly, there's a lot of literacy involved. People need to understand that this is an insurance product. It could be complex, and they may have difficulty in terms of choosing among very many products. If you were to offer them, say, 10 different products, or if you were to offer them, you could choose a service, or you could choose a cash benefit, or you could choose a mix between service and cash. So it would become too complicated if we were to have too many of these kind of variations, which is why in Singapore we decided to just keep it simple with just cash benefits and these 2 products, ES 300 and ES 400. And as I mentioned, there's no need for out-of-pocket premium payment, which is a relief for most workers, as you might imagine, because there's stimulus payment of this premium through the CPF, the Central Provident Fund, which is very important. And in that way, when you ask some Singaporeans, they do not even know that they are enrolled in the scheme because so much things happen back end based on auto enrollment and the stimulus integration with the CPF. Next slide, please. So the little bit of time that I have remaining, I thought to share with you after this first phase of development of this scheme, what then happened. Next slide. So here's the timeline that we saw before. After we implemented ElderShield in 2002, we continued to review the scheme at each 5-year period. That's the stars that we see. And a major review occurred in 2016 to 2018. And that was the time point, the turning point that Singapore became an aged society. So I was involved in that review as well. Next slide. in terms of who were the ones who were mainly responsible for this ElderShield review, with the government set up a committee made up of people from all walks of life, basically. But these are very senior officials in the unions, in the ministries, in the AG chambers, and also from the hospitals as well. Clearly very important, as well as various private industry players. So next slide. So that committee decided to do a whole series of public consultation exercises involving the broader public. They clearly, these days, you have to go through social media. So on the left, you have a social media Instagram posting whereby anybody could just scan the QR code and give feedback about the scheme. We also had town hall sessions during the community events where representatives would come talk to people on the ground about the scheme and ask what they like or dislike about the scheme. And we also had closed door meetings in the picture on the right, whereby experts and academics like myself were called in to share our viewpoints about the scheme in a more technical manner. Next slide. So basically, this just shows you a whole load of people were involved in the whole consultation, including the Association of Women, for example, because clearly we need to think about how our scheme is inclusive for women who are paying higher premiums for this insurance policy. And then we had people, for example, from the Silver Generation Office who are clearly important because they interact directly with people elderly on the ground. We had healthcare professionals, and because this is designed to be an actuarially sound scheme, we had the insurers in as well, the actuarial advisors, the insurance stakeholders, all very important. And we had people like myself, academics, and then we had advisors and people from the industry. Next slide. So what we found from that important review is that the ElderShield had some success. It covered about 64% of our population. So that was pretty good for a pilot scheme. And what was important was that we saw ElderShield as a part of the whole ecosystem on financing long-term care. It is certainly not the only way to finance long-term care, or as we like to call it, pensions, the only pillar, right? Because if you depend only on a single pillar for your financial support, that's very risky. So ElderShield complemented personal financing, it complemented other government support and subsidies program, and as well as the assistance schemes from the voluntary welfare organizations. Next slide. So another way that, which is pretty unique as I would think about when studying long-term care insurance systems around the world, was that ElderShield had some pre-funding, which is not that unique in terms of a pre-funding, but the fact was that the pre-funding occurred within each generation of policy holders. So for example, the cohort born between 1950 and 1960 were in the same generation, and the premiums in a way we risk pool within each generation, but we do not cross-subsidize to the next generation of policy holders. And this ensured that the scheme is financially sustainable in an actuarially fair way. Next slide, please. But there were also some issues, despite a pretty good design. The issue was really about the public communication and understanding. So most Singaporeans back in the 2016, they think that severe disability is not very likely. They were also unfamiliar with the scheme because, like I said, because of auto-enrollment, and because the premiums were directly deducted from their pensions account, some were not even aware that they were covered by the ElderShield long-term care insurance. Then there were some concerns about the claims processes and administration. They felt it was difficult to submit a claim. In Singapore, unlike perhaps in Japan, where you have to go to the city hall to verify that you are still disabled and therefore able to do the claim. In Singapore, it's a smaller country, but still the participants felt it was very tedious and challenging to get to a medical doctor in order to certify that they were still disabled. Next slide, please. And therefore, in a way, a key critique was also that although Singapore was able to cover about 64% of the population, it does mean that there's this 35% of the population that was still uninsured. And this doesn't help when we think about the universality of this kind of social insurance scheme. So after a review, what happened was that CareShield Life was introduced. So CareShield Life is a universal social insurance scheme that was developed and introduced in 2019, but implemented in 2020. Next slide. So this brings me to the CareShield Life that was implemented in 2020. And I just have a few slides on this scheme because we are already into this in a way transited from the ElderShield to the CareShield Life, in a way, what we have done and what we have innovated, I would say, in this latest iteration of the scheme. Next slide. So the rollout of the CareShield Life came with legislation, and in a way, it was landmark legislation. Clearly very important.
Semuanya. Oke. Ntar ya kayak.
Time's up or something?
Go ahead, please. Sorry for the interruption.
Oh, okay. All right, so I'll move a bit quicker. Clearly, when Singapore did this, they became aligned with many other developed countries, including Japan, South Korea, and various European countries in terms of having this law on the long-term care insurance. Next slide. So here, just put the two schemes side by side, the old ElderShield scheme and the new CareShield Life scheme. I will focus on three key changes in this sharing today. Next slide. So the first key change is that the CareShield Life is mandatory, whereas the ElderShield was voluntary. So in this way, by making it compulsory for everybody to join this scheme, we eliminated the coverage gap that existed. And in a way, it didn't lead to much public protest because after 2 decades of the ElderShield, the people were more aware of this need for the long-term care insurance. And from an actuarial perspective and insurance perspective, when your risk pool is larger, it leads to a diversification of risk. And of course, clearly, this allowed for more inclusiveness and universality. Next slide. The second innovation was that previously ElderShield did not have any government subsidies. But when you roll out a scheme that is compulsory and mandatory, you probably need some subsidies to incentivize people to join. So here are some subsidies and premium support incentives that were rolled out together with the new CareShield Life. I've also included the link at the bottom so that anyone who's interested can also have a closer look at what some of these premium subsidies. Next slide, please. And this is, in a way, I thought to share this diagram because it illustrates very clearly something different from what ElderShield was. If you remember, ElderShield was just a fixed $300 or $400 payout for a duration of 5 to 6 years. But here we have a CareShield, this latest version. What we have is a payout increase. So as long as this man that you see in the picture, Adam, does not claim from the CareShield Life, his promised benefit payout would actually be stepped up over time. So if he's able to not be disabled until he reaches about, say, 67 years old, his payout that he can enjoy is about 1,377, which is much higher than the payout that he would have enjoyed if he had become disabled right away at age 30 or even earlier. Next slide. So in this last slide, I just make some concluding remarks. I think overall, in my view, the Singapore's ElderShield, which was set up as a pilot scheme, it was set up in a voluntary way, and then it had some mixed results, basically. So there were some successes, but it had some room for improvement. But what was important was that I think policy makers learn by doing. And just trying to roll out this scheme and then periodically reviewing it, they could adapt strategies and then improve design aspects along the way. Clearly, there's no perfect scheme. It's about designing a scheme that meets your citizenry needs. And so in that way, our policymakers in Singapore learn by doing. At the end of the day, the CareShield Life is still a bare bones scheme because the threshold of 3 or more ADL disabilities is still there. So those with mild disabilities do not get any kind of payouts. But it features some innovation, as I've shared, in terms of a payment increment, for example. So just to summarize, I think a long-term care financing policy can and should consider interacting with the broader elements of the other social security system. For example, we had the integration between our ElderShield and CareShield together with the CPF, which is clearly our social security system that has been established since 1955. So it's a very established system. And when people trust the CPF in a way, and people will then trust this new scheme. So somehow it's all integrated. And clearly, it's also important to focus on capacity building and governance in the long-term care sector. Thank you, and I welcome any questions. Thank you.
Terima kasih banyak, Profesor Fong. Apakah masih ada waktu untuk tanya jawab, Profesor Fong? Mungkin saya akan minta dari peserta menanyakan ke Profesor Fong dulu. Ada 5 menit mungkin? Ada waktu, Prof? Oke ya, oke. Mungkin Bapak Ibu, kita masih ada, walaupun seharusnya sekarang sudah waktunya coffee break, mungkin kita bisa minta waktunya sekitar 15 menit untuk tanya jawab, tapi untuk yang pertama ini kesempatan pertanyaannya untuk Profesor Fong dulu. Saya berikan waktu Bapak Ibu jika ada untuk Profesor Fong karena beliau sebentar lagi sudah harus berangkat. Dari Ibu, satu lagi. Sudah? Ya, silakan Ibu, mohon sebutkan nama dan asal institusi.
Good morning, Professor. I'm Nurul from Asian Development Bank. I'm interested with your presentation, and you mentioned about the importance of ensuring the sustainable financing for the long-term care scheme. As Indonesia is a country with huge informal sector, we face challenges to ensure sustainable revenue collection from informal workers. And if we implement this long-term care later on, we might face same challenges as well. So in your expertise point of view, what would be like the best way in implementing long-term care later on in Indonesia? Shall we step by step, for example, by targeting the pension group from the formal sector first, which they might have like a pension fund in them, or shall we do like how to say consider like another approach, for example, do like the national rollout but providing certain subsidy, for example, to those that might not have like adequate pension fund. Thank you in advance for your presentation.
All right, thank you very much for the question. I think in a way, either approach that you have suggested sounds very reasonable. What I have, in a way, quite a bit of my research has focused on pension systems around the world, not only the Singapore CPF. And what we notice in the pensions landscape is that when you introduce pensions for formal workers, and then you have another pensions for, say, the civil servants, then you have pensions for the private sector workers. Very quickly, you'll see that the pension landscape becomes fragmented and divided. And you may end up with, like in many other countries as well, different groups of retirees receive different amounts of retirement income from these pension systems. Some are more adequately covered, but some are less adequately covered. So you might get this social disparities if you were to have different schemes serving different segments of the population. So my suggestion is that in a way, a key concept that I always teach in classes is about harmonization. A best way clearly is, if possible, to set up one scheme for everyone. In that, it's more straightforward and it will be administratively easier. There's also economies of scale. And another reason, perhaps more from the insurance perspective, because I'm an insurance economist, is that instead of having different small pools of people, right? Because we are talking about risk pooling in long-term care insurance. Instead of having different small pools of people that are insured, you rather have one large national pool in a way to spread risk. So some arguments in a way for one scheme for everyone, but clearly in a large country like in China and in India, I recognize that it can be quite difficult as well. Thank you.